Good morning, Watchmen. We have a situation on our hands. The game has changed. For months, we've been tracking dark pool suppression that made no sense. We've watched the ceiling fall, and we knew that the math didn't add up. Today, an answer has been found. Scilex has officially filed a federal complaint in California, and the allegations are nothing short of structural heist. According to the filing, Scilex entered into what they believe was a legitimate $100 million loan with St. James and its principal, Mark Wade. To secure that loan, Scilex pledged over 85 million shares of DataVault as collateral. The contract was simple. St. James was supposed to hold those shares until the loan was repaid, but Scilex alleges that they never intended to hold them at all. They allege the entire transaction was a sham because St. James didn't have the capital to fund the loan in the first place. This is where it gets forensic. The complaint alleges that as soon as Scilex transferred the 85 million shares, St. James moved them into a brokerage account at BNY Mellon, an account that Scilex says it never authorized and never opened. Once the shares were at BNY, they were liquidated. The lawsuit alleges that millions of our shares were dumped onto the tape over a short period. This wasn't retail selling, it was coordinated liquidation. The complaint points out that on the exact day that Scilex transferred 39 million shares, BNY Mellon's position increased by nearly an identical amount. They were feeding our shares into the market to fund their own loan. Now we know why the ceiling felt like steel. The lawsuit alleges that by dumping these millions of shares, the defendants intentionally tanked the price of DVLT. Why? Because the loan terms had a maintenance clause. When the price dropped because of their selling, they claimed Scilex was in default. Then they used that manufactured default to demand even more collateral, which they allegedly sold too. It was a quote-unquote death spiral designed to extract every penny of value from the DataVault treasury. This is why Kasowitz was hired on January 2nd. Both companies hired Kasowitz as an attorney. Management probably knew that this was happening already, and they've spent the last 70 or so days building a RICO-level case against him. Scilex is asserting 5 causes of action, including federal securities fraud and unlawful conversion. They're not just asking for money, they're exposing the broken gate at BNY Mellon. If the court orders what's called a specific performance, the defendants could be forced to go into the market and buy back the 85 million shares immediately to return them to the treasury. If you ever wanted to know what a trigger for a short squeeze looks like, this is it. So, Watchmen, this litigation is the bridge to growth. This confirms that price suppression was not a rejection of the tech, it was a structural attack. While we still have the deadline for the audit and the deadline for compliance, now we have a sort of smoking gun. We'll still have our episode tonight, but I had to put this out there because it's really important information. Until the end of all things, the Night Watch stands.